Hello and welcome back to the Microlearning Institute. In this short tutorial we'll have a look at the key principles of IAS 24 Related Party Disclosures. Related party disclosures highlight the possibility that the entity's financial position and profit or loss might have been affected by the existence of related parties and by transactions and outstanding balances with such parties. IAS 24 requires disclosures about transactions and outstanding balances with an entity's related parties. The standard defines various classes of both entities and people as related parties, and the standard sets out the disclosures required in respect of those parties. Firstly, let's look at the concept of a related person. A person, or a close member of that person's family, is related to the reporting entity if that person has control, joint control, or significant influence over the reporting entity, or if that person is a member of the key management personnel of the reporting entity or its parents. We must disclose key management personnel compensation in total and for each of the following categories: short-term employee benefits and post-employment benefits, and any other long-term benefits, as well as termination benefits and share-based payment benefits. An entity is related to a reporting entity when one of the following 8 criteria are fulfilled. Either they are both members of the same group, or one entity is an associate or joint venture of the other entity, or both entities are joint ventures of the same third party, or one entity is a joint venture of a third party and the other is an associate of the third party, or the entity is a post-employment defined benefit plan for the benefit of employees of either the reporting entity or an entity related to the reporting entity, or the entity is controlled or jointly controlled by a person identified as a related person, or a related person has significant influence over the entity or is a member of the key management personnel of the entity or of a parent of the entity. Or finally, the entity or any member of a group of which it is a part provides key management personnel services to the reporting entity or to the parent of the reporting entity. Some parties are deemed to be unrelated. For example, 2 entities are unrelated simply because they have a director or key manager in common. Or a single customer, supplier, franchisor, distributor, or general agent with whom an entity transacts a significant volume of business is unrelated merely by virtue of the resulting economic dependence. Also unrelated are 2 venturers who share joint control over a joint venture, as well as any providers of finance, trade unions, public utilities, and departments and agencies of a government that does not control, jointly control, or significantly influence the reporting entity simply by virtue of their normal dealings with the entity. A related party transaction is a transfer of resources, services, or obligations between related parties regardless of whether a price is charged. We must disclose in relation to related party transactions the amount of the transaction, the amount of any outstanding balances, any provisions for doubtful debts relating to the amount of outstanding balances, any expenses recognized during the period in respect of bad or doubtful debts due from related parties. Examples of related party transactions include any purchase or sale of goods, property or other assets, any rendering or receiving of services, any leases, loans or any equity contributions, as well as any provisions of guarantees or collateral, as well as any settlement of liabilities on behalf of the entity. Thank you very much for watching this brief overview of IAS 24 related party disclosures from the Micro Learning Institute.